let's welcome on board the management of Gokaldas Exports. We have with us S. Ganapathi. He's the managing director at Gokaldas Exports, joining in on the show right now. Mr. Ganapathi, great to have you on the show. Just going by your quarterly performance, your revenues were flat on a year-on-year basis, but saw a dip of 9% on a sequential basis. Are attempts by global retailers to try and reduce inventory and inflationary pressure on discretionary spends, you think, playing spoilsport?
No, so these are all ebbs and tides of businesses. At the moment, the global markets are a bit soft, and I anticipate that it may remain soft for a little while before picking up. The recessionary trends which are expected in the US, the general prognosis is that it's going to be mild. Let us see how mild and how protracted it will be. But my sense is that, come 2024, FY24, we should start seeing traction because, brands start placing orders ahead of time. And I anticipate that in 2024, at least the markets, the retail markets will be very strong. There'll be good bounce back in the markets, which means that they should start placing orders on us early on. So for now, I think, we have managed our costs very well, retained our margins very well, given the scenario, and we hope to keep it that way. And once the growth comes, we would definitely take market share and keep growing. So that's how we are seeing ourselves.
Is this destocking cycle expected to end, and when do you expect customers to start placing fresh orders and consequently then, see an uptick in your revenues?
So in my sense that, worst case scenario, 2024 calendar year is when, the brands will be coming back very strongly buying, which means for us, middle of FY24 or from Q3 onwards, we should start seeing traction from order placement standpoint. In the meanwhile, we'll still, try to hold on to, our market share, or probably even gain market share. But real breakout growth will start happening in the second half of the coming financial year. That's how I'm seeing it. That's the worst case scenario. If things, start progressing better, maybe it'll even advance.
Good morning. So given this kind of optimism that you have then for the second half, can we also see that on the back of lower input costs and perhaps freight costs, your margins as well could grow substantially?
So, margin improvement is an ongoing effort. At the moment, I don't see substantial improvement immediately. But, our long-term, trend of trying to improve margins by 1% or 1.5% continues. But in the short term, it may just remain put before we start seeing an uptick.
What kind of opportunity as well is it that you're looking at when it comes to Europe and the UK, given that there has been meaningful progress that's being made on free trade agreements as well?
So the real progress has been with UK. However, the FTA has not been signed. So, we are hopeful that it will happen. These are complex dialogues between two countries. And as and when that happens, we would anticipate that India's business with UK should go up substantially. And Gokaldas, being a large player in the business, will be a big beneficiary out of that.
And, it's been very unfortunate in Turkey, given that it is, the textile industrial hub.
Right.
Would the Indian garment exports to EU improve in order to fill that supply gap currently?
So there is a substantial capacity where the earthquake happened. So it's very unfortunate that a lot of capacity has been impacted. Time will tell us whether, how much of that will move to India or some other countries. Obviously, when there is a supply chain realignment, some amount of benefit will come. We will have to see, how they pan out.
Right. Your facility in MP, by which the company is participating in the textile PLI scheme, is also expected to commence from Q1 of FY24. What is the incremental revenue that you're expecting, and will the PLI incentives for the same kick in immediately on commencement?
No, the PLI incentive will not kick in immediately. We are anticipating that should happen sometime in FY24. The reason is that there are certain revenue thresholds for PLI to kick in. So or it may even go to FY25 rather, because we have one more unit to come up, and those revenue thresholds have to be met. Having said that, in FY24, we are anticipating about 50-60 crores of revenue from that unit, as the unit will be ramping up during that financial year. But going forward, we should start seeing the revenue grow substantially from the Madhya Pradesh unit.
And you've got a very ambitious capex plan as well. You're looking at setting up facilities overseas. What is the overall capex plan lined up? What are your plans in particular for UAE and Bangladesh?
So overall, we have, between this year and next year, we are, spending about 300 crores of capex, up to say FY25. So FY23, 24, 25, and we are on course to achieving that. Our intention is to expand our footprint in India when the market turns a little more positive for us, and that's what I'm saying, that I'm hoping it will happen definitely from middle of FY24. So we will have to start working on the capex accordingly. We are, as I said earlier as well, that we are looking at capacity in Bangladesh as well. We're working on it, and hopefully, once we get a clarity on various macroeconomic environments, we should start going very aggressively on setting up that capacity as well. But we are committed to that capacity, and anyway, it should happen sometime in the near future, more likely by end of FY24 or early FY25.
Thank you so much for taking time out and joining in, giving us a brief as to how things are looking. So capex plans which are on, and Gokaldas Exports as well, talking about how improving margins is a continuous effort, and the company is looking to overall, see a growth in the second half of the year. That's Gokaldas Exports in today's trading session, buzzing as we speak.